So it's a pretty good first quarter, eh?
Absolutely. The investors who were in the market in the first quarter did hit the lottery. It was a remarkable quarter, especially if you were in the NASDAQ, up about 20%. Japanese stocks, 20%. German stocks, 16%. Even the boring old S&P up 12%. So you don't get too many quarters like this, and obviously the question is, will it continue? But for today, we should enjoy it.
Right. Now, let's first turn to the first quarter, because most Wall Street strategists were not predicting a gangbusters first quarter. In fact, a lot of them were pretty down, not only on the first quarter, but the whole year. How did the smart guys on Wall Street manage to get it so wrong, David?
Well, the smart guys, you know better than I do. I mean, the smart guys often get it wrong. In fact, they probably get it wrong half the time like the rest of us. But, you know, I think after the pain of last year, where we had the ups and downs and the Euro crisis, and we ended up in the year just flat, everyone was just worn out and tired, and no one was expecting things to take off so quickly. We had a good January, and then they thought it would fall back. We had a great February, thought it would fall back, and now we've had a good March. So
I mean, at
some point it will fall back, but for right now, we're looking good.
The one thing you'd have to say, if you look at any of the charts, and JR, I don't know if we have any of the charts for the quarter, maybe we only have the daily, but it's been remarkable how relatively little volatility there was in the first quarter, how many, you know, very few down 100-point Dow days we've had, and how if you know, I hate to, that is not, that's just today. But if we get the camera on me, it's kind of been like one of these 45-degree angle kind of charts where the market just goes up, you know, day by day a little, pulls back maybe a little, but then goes up. It's been remarkable how steady the rise has been, Dave.
It really has, and there's been very little volume too, which is a bit worrying going into the second quarter. That there's, you know, volume continues to sink from 2008, 2009 levels. So, you know, I think there wasn't a lot of bad news in the first quarter, so there wasn't a lot of volatility. We had some worries about Iran, but that's about it. Now, that can't go on forever.
Right. Eventually something will happen, and it usually will happen when nobody's expecting it. Now, you touched on some of the recent quote-unquote hot IPOs. Annie's, you call this the mac and cheese recovery. Annie's is up like 90% in 2 or 3 days. We've had a few IPOs lately, not a huge raft of IPOs, but more than certainly they've been over the past couple of years. They've done very well. Is a strong IPO market the sign of a continued bull market, or are they a lagging indicator in this case?
I think it's the sign of a continued bull market and a stronger recovery. I don't subscribe to the theory that it's just CEO, you know, managers trying to get out because they've taken their companies as far as they can. I think it's a stronger sign. And the IPO market has been dead for many years. So it's really, you know, we thought last year, okay, it's a couple of tech companies, Zynga, LinkedIn, you know, the web companies, the socials. But now, you know, the Annie's thing proved that it's more than that. It's a little more healthy. And the pipeline going into the next quarter, including Facebook, is pretty strong. So if we can continue that pipeline, there's reasons to be optimistic.
Dave, if the first quarter was all about Apple, I mean, Apple, I think, more or less doubled in the first quarter of this year, added, you know, something on the order of $250, $300 billion worth of market value, which is an astonishing amount of money. If the first quarter was all about the rise of Apple, will the second quarter be all about waiting for Facebook? And is there not the danger that in riding everything on these few kind of big tech growth stories, that the market is the risk of a pullback if something doesn't go as planned?
Well, I think it definitely is. I think Apple was accounted for something like 15% of the S&P's rise in the first quarter, and you're right. It was a huge growth, 50% growth. That can't continue. I think a lot of expectations are going to be on Facebook. We'll see a lot of the other social media stocks rise in anticipation of that. But remember, Evan, the first quarter also saw huge rises in overseas markets. So this is not just a U.S. tech stock thing like it was in 1999 and 2000. This is something's happening globally, and it's a good sign. I think it's a U.S. recovery.
Okay, final question for you, Dave. Does the second quarter end up or down versus the first quarter? Real simple, black and white, yes or no?
Down.
Down. Dave Callaway, editor-in-chief of Marketwatch, ending on a not very optimistic note. Dave, thank you very, very much.